following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 28th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, really, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call, what is failure? What is failure after all? Folks, you know, if success is the steady progress towards your own personal goals, then what is failure? Something to think about. Well, let me ask you this question. Is failure working on a project that ends with poor results? Of course not. How about this? Is failure launching a new product that fails miserably in the marketplace? Of course not. Is failure doing the best you can do with your kids and then having them disappoint you? Oh, that's an easy one to think about, huh? Of course it isn't. Folks, there is no failure in pouring out your heart, pouring out your soul, your energy into something that doesn't work. Rather, failure is simply not trying at all. If success is the steady progress towards your own personal goals, and failure is simply no progress at all. You know, success and failure are always linked together. Success is doing. Failure is not doing. It is that simple. Let me give you a formula for disaster. This is pretty simple. Could, should, don't. Let me give you the formula for success. The formula to build a fortune. Could, should, and will. Of course, you want to add a little dose of massive action along the way. That would help. A man or woman says, I will climb that mountain. And then people say, it's too high, it's too difficult, it's way too rocky, it's never been done before. And that man or woman says, hey, it's my mountain, and I'm not coming back until I've climbed it. That, folks, is power. You know, studies show that the greatest achievers aren't those who fail the least. The greatest achievers are those who are the least frightened of failure. Remember this, folks, without failure, there can be no success. That is what failure is. Let's go take a look at these markets. Let's go see if we can find some success or failure. Obviously, success yesterday with the markets moving up higher. If we take a look around the globe here at the moment, you've got the DAX up 33 points, about 0.4%. The FTSE up a quarter of a percent, I should say, up 16 points. Over in Asia last night, the Nikkei having a little party there, up almost 3%, up $300. The Hang Seng up 443, that was up almost 2%, and the Shanghai up 2.25%, up 54 points. Our markets here right now relatively flat. The Dow futures off about 14, S&P futures off about 0.75 point, Nasdaq futures up a couple. Pretty flat market out here. King dollar up a few ticks. The euro flat out there. Really in the currency marketplace, things are pretty calm at the moment. Gold futures are flat as well. $15.95 is what they're trading at. Silver up 4 pennies out at $29.02. Light sweet crude up 8 ticks at $92.84 out there. Even platinum is really unchanged at $1,600. Even Steven out there. Our call-in number is 877-927-6648. Give us a call. Would love to hear from you. So where should we go start taking a look at what's going on? Well, let's just start with the NASDAQ futures because we can clearly see where the bulls are hanging out. They're hanging out at one of yours and mine, our favorite candles out there. It's the hammer candle. That hammer candle inside the in NASDAQ futures. This is the 30-minute contract that we're looking at coming in at that 5 o'clock session on February 25th as the market was pushing down. That is where the first time that you saw any bulls show themselves, and that area was tested. Now, there were about 3,100 contracts at that level, the low there being 2691.75, and, of course, pushing down with volume, 48,000 contracts at about 12 noon on February the 26th, but the bulls were able to hold that area. It's why you want to make sure that you know where you want to make sure you know your candlesticks out there. That is most certainly true. That is where the bulls are hanging out. Yesterday's push up in the market, what happened? Well, if you just take a look at this intraday chart here, just simply making a 100% move of a move. What is that, you ask me? That's a great question. 100% move of a mover. When you take a look at any stock chart, what you're looking for are swing points. And you're looking for what we'll call the major swing points, the major thoroughfares, just as if you were driving down the street. If you drive down the street, many crossroads that you pass, but it's those major intersections. Maybe it's those ones that have got the stoplights. And what you'll find is that when you identify those major intersections, the way the price moves, most of the time it hits that stoplight. You ever driven where you seem to hit every stoplight at every major intersection? Well, the market works the same way, if it's timed that way. And when we talk about swing points here, you take a look at a major swing point on a 30-minute chart. That would come in at about the 10:30 a.m. time frame on February 25th as the NASDAQ futures were making a 0.786 Gartley sell pattern. If you're watching us on Tiger TV, that's what you see. That was the shaded blue area. That is a Gartley pattern. It's got an A to B equals CD. Also has a retracement to one of our Fibonacci numbers. Those are 0.618, 0.786. There's also 0.382. That really helps to understand trends. And then you've got your expansions, 1.272, 1.618 out there. You want to make sure that those are a part of your toolbox. If you're just listening on the radio, which is a wonderful thing, or maybe at tfnn.mobi, even a more beautiful thing out there, remember you can always catch this show. We do broadcast this. You can get the live stream of this. Just go to the homepage of tfnn.com. Over on the right-hand side, what you will see is a little area where you'll see 3 buttons with smartphones. It says Tiger TV. Click on that. This show will stream live to your smartphone device. And remember, you can always catch the archive of this show on Channel 9. So we've got our major intersection here. As the NASDAQ futures were driving along, they created that major intersection. Why major? Well, you can take a look at it as really being a significant area where you see a change in trend. Moves all the way down until it creates a new intersection. That intersection was where you had the construction crew out, the bulls and the bears, and it looked like it was the bulls that were out there. That was that hammer candle that we were talking about coming down into the low at 5 p.m. on February 25th, and they did a pretty good job of creating a intersection there, an intersection that has some pretty strong support. Been tested once. If the market pulls back, that is where you'd be looking for a signal right now as we look at the 30-minute chart. Neither overbought nor oversold, of course, as the market moved up yesterday, moving up into the 12 noon, all the way up into about the 3:30 time frame. The market just really getting into that overbought territory, and as you know, in order to work that off, what's it going to do? That's right, it's going to do one of two things. It's either going to pull back or it's going to move sideways. We can see this market here moving sideways ever since 5 p.m. last night. I mean, totally sideways out there. And so small consolidation. The area is so small, almost not worth even noting. The top of it would be 27.47, and the bottom of it, maybe we'd call it about the 27.40 area. So you've got maybe 6 points out there with regard to a consolidation. Not really giving us any clues here. You did have that big down thrust with about 57,000 shares coming into the close in the NASDAQ futures. So a little bit of a sell-off in the end, but of course, yesterday, the NDX was up 28 points. New York Stock Exchange was up 109 points. The NASDAQ up 9, up 32 out there. S&P up 19 points. So big moves out in the marketplace. If we go take a look at the daily futures out here, let's just take a look at these. We're taking a look at the 4 quadrants. Up in the upper left, you've got the S&P futures, the ES Mini. Lower right, you've got the Russell 2000 futures. That is the TF as my symbol. If you got the NASDAQ futures over in the upper right, NQ, and the bottom right, the Dow futures, YM out there. As you can see, really not much going on with the exception of the Dow. The Dow going ahead. If we take a look at the Dow futures, taking out its swing point high. When I talk about swing point high, really its most recent high out there. That was December. That was February 25th. Can you believe it? Already the end of February. February 28th out there. It's a birthday celebration here at TFNN for none other than David White. He gets to celebrate, really. Well, he either gets to skip a birthday, so I guess it's your choice. What do you want to do? Or celebrate it for 2 days, because his birthday is the 29th. I think if it was me, I'd be celebrating. I'd like a 2-day birthday celebration. Keep on bringing in those presents, those gifts, and, of course, some great cupcakes or chocolate cake or pie, whatever it is you want out there. The high of February 25th out there was 14,064. The actual close in the futures contract yesterday, 14,064 out there. Right now trading out at 14,047. So really not much going on. And really, all the hoopla in the Dow, he's still on the futures. You're still within that range of that 1.272 butterfly pattern that is out there that really formed coming back into that February 1st time frame up at the high of about 13,962. So really not that far off. If we go take a look at some of the metals markets, let's check in on gold. Gold down $3 right now, no big deal, out at $15.92. Of course, the big deal in gold is it only got up and above the downdraft candle here, most recent downdraft candle from February 20th. That high was 1609, closed above it 2 trading sessions ago, and closed above it with some decent volume. It did 164,000 contracts. The close was 1614, but the bulls gave it up right away. The bears took control, trading back inside that candle. Says to me, gold will likely go back and test its lows. I suspect those lows here being about the, you could say 1554, or you could go all the way back really to the range of 1526 to 1552. I suspect that's where gold wants to trade to, where it then will put in a pretty decent bottom out there. It will put in, I believe, it'll put in a decent bottom out there. That isn't gold. And, of course, we'll see what happens as it moves down there. We'll take a look at the volume. The bulls and bears, they'll tell us whether the move is over there. Silver, really the same thing. Now, silver, weaker here than gold. For weeks we have been talking about the fact that silver was stronger than gold. I say it's weaker than gold for the following reasons. Number one, the reason is, with regard to the last several days, silver not being able to get above the body of that February 20th candle. Still trading inside there. Silver will or should move down to 28.25. 877-927-6648. Give us a call, folks. It is Terrific Thursday. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. Not much change in the futures during that break, and a couple of housekeeping things here. You know, if you are in the California area, San Mateo specifically on March the 16th, from 8:30 to 12 o'clock. Go over to the homepage at TFNN.com. Sign up for the live workshop. You're going to have Tom, Daryl Martin. Dynamic Trading Strategies is the name. And it's all the details on the homepage at TFNN.com. Going to be all kinds of prizes. 30 prizes worth $2,500 out there. So it's going to be a great educational time. And looks like you're going to get paid to even attend the event. So what a beautiful thing. Check it out if you are anywhere near the San Mateo area. Also, coming up on March the 9th at Babson College, our man Basil Chapman holding a Master Trader course. All the details of that on the homepage of TFNN.com as well. Go check that out. As we come back to the market, the chart we've got on our screen here is of the 30-year Treasury, the continuous contract out here. You know, we have been watching this for quite some time. Yesterday, making its way up into that resistance area, strong resistance area. This thing is held as resistance maybe 5 or 6 times here. The resistance we're taking a look at is that gap down, is the high of the January 2nd candle. That's really your first level of resistance. That's that 146.1 level. Your second area of resistance is going to be the low of December 31st, where it had gapped down from. That low being 146.23 out there. First level of resistance held strong. And, in fact, yesterday, creating a key reversal day. Key reversal day where you have intraday session above and below the prior session. That is what happened yesterday. You actually got up to 146.110. The prior day, 146.1. The low of yesterday and the close, which was in the opposite direction of where price was moving to. And an extended condition. Now, you could debate whether or not we had an extended condition because there's really 3 elements that you need for a key reversal day. You know, an extended condition certainly wasn't truly in the bought territory, not the overbought territory of the relative strength indicator out there. Certainly was an expansion of swing points or what have you. But I'm gonna give it the benefit of the doubt out there. Today you've got the 30-year trading out at 145.14. So the bulls have not yet given up on this. Today's trading session will be important out there. That is on the 30-year Treasury. A quick peek in on light sweet crude. Really, that has been consolidating sideways here for now just a couple of days. Trading out 92.79. Looks to me like light sweet crude still wants to make lower price. 89.47 to 87.09 would be the target. If we take a look at things moving here in the pre-market, you've got Monster Beverage, MNST out there. That's popping to the upside. They are trading right now at 52.44, closed at 49.62. Boy, used to trade this thing back in 2006, 7. and ate all of the time. It was underneath a different ticker symbol. It wasn't called Monster Beverage. What was that thing called? In any event, they had net sales of $2 billion versus $1.7, net income $340 million versus $286 out there. That's Monster Beverage. Sears Holdings, SHLD, closed at $47.47, trading out at $48.90. Looks like that may gap up. Sears with a net loss of $489 million versus $2.4 billion the year prior. So making up some ground and losing less money out there. Guess that is a reason to certainly celebrate, I suppose. If we go take a look at, you've got also popping, you've got Tesaro, TSRO, my apologies, 1818 is what it closed at. 1860 is where it is trading right now. To the downside, leading the charge of the downside, Broadsoft, closed at $30.91. They're trading out at $23. That's getting a little hammer out there. So dollar-wise, down about $7. They did net income of $12 million versus $32 million a year ago. Earnings per share only 43 cents versus $1.15. And revenue-wise, total revenue, not too bad. They got the top line, so they must have had some big write-offs there. They did $45.8 million in the fourth quarter versus $40.55 out there. They are trading down for sure. JCPenney, not too far behind them. They closed at $21.16, trading out at $17.94. So they are also, they're struggling out here. Net sales of about $13 billion versus $17. A net loss of $985 million versus $152. Problems at JCPenney. You got Groupon, closed at $5.98 right now, trading out at $4.25. Groupon missing their numbers last night. Let's see here. They got a loss per share of 10 cents versus $1.03 of last year, so that's not too bad. They did revenue of $638 million versus $492, so it was their guidance that they apparently missed out there. You've got BHP Billiton. They closed at $75.54. They are trading out right now at $74.67. Molly Corp down. We get back, we'll go take a look at some of these stock charts. 877-927-6648. Hope you're having a great Thursday morning. I know I am. Being here with you folks. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 19 points, composite flat, down 18 cents, S&P off 73 cents, small caps down 42 cents. Apple up 79 ticks. Google up $2.96 out there. Leading the charge to the upside right now, Universal Display just pulled in front of Monster Beverage. Universal Display up $2.49, about 9%. Monster Beverage, which used to be called Hanson Natural. That's what it was back in the 2006, 2007 time frame when I used to trade that. It was great stock out there. I happened to catch a great trade on that when I believe it was Coca-Cola said they were going to buy him out. It was the first time that they pushed that rumor. They've pushed it out a few other times, but it was back in, I think it was 2007, when they had pushed that rumor out there, and that was a beautiful thing. Monster Beverage. Now, I caught that trade by, I like going to Costco, one of my favorite stores out there. It's always great to watch what people are wheeling out of there. It gives you a pretty good sense of what's going on. Now, I've actually never tasted one of those drinks, whether it's 5-Hour Energy or Monster Beverage or any of that stuff. But, I don't drink soda as well, so you're not going to catch me drinking that stuff. But I did watch people wheeling that stuff out in droves in their carts, and I said, I got to check into that stock. That was more when I was a fundamental trader versus technical analysis. So we'll take a look at Monster Beverage. In fact, right now, I've got the weekly chart up on my screen. It's trading out at 51.76. And, folks, this is a reason why, this is the weekly chart we're looking at. It's a reason why you want to make sure that you're paying attention to volumes and you're paying attention to where those volumes are at. Now, in the case of Monster Beverage, the week ended June 22nd, 2012, had a high out there of $79. One of Basil's round number highs out there on a weekly chart. Did it with 10.7 million shares, created a bearish engulfing candle, but it's really the next week that is the key to this equity here. The next week has volume off of the top, big volume, 48 million off of the top. Hasn't seen those highs really since then. That high being 75.15, made its way down to a low, created a little hammer candle. We see where the bulls came in on this equity, which is down here on the November 9th level. The low of that is 39.99, high is 45.74 out there. That's where the bulls are hanging out. Getting a little bit of a pop out here in the morning. But what you want to really pay attention to is when you see this volume up at the top. Here's a weekly. If we go back and take a look at the daily, we'll certainly see that as well. And just simply get out of town. No reason to hold on to the equity. Yeah, it may give you a chance, if we put this back on the daily chart out here, it may give you a chance or two to get back in. In fact, in case of Monster Beverage, it did. That volume day, one day, June 28th, 38 million shares to the downside, goes ahead and pops back up for 2 trading sessions, allows you to get out at around the 75, anywhere between the low of June 28th, which was 66.37, and the high of July 2nd out there, that was $75 even. Gave you a chance to really get out of the equity, and then obviously it just continued to cream lower. It's got some pretty decent volume here as it moved down into those lows, where on the weekly chart it created that hammer candle. On the daily chart, you had some volume on October 22nd, 22 million shares. You had some follow-through on the next trading session, 19 million shares. The gap up this morning, no great big volume behind this yet here. Looks like there's still underneath a lot of pressure. I suspect that this will end up trading back and testing these lows here, where that weekly hammer was, right around the on the daily chart. Takes you down to 40.06, which has 19 million shares down there. That was on Monster Beverage. Let's go take a look at Broadsoft. Broadsoft is the leader in the clubhouse to the downside. BSFT is the ticker symbol out here. Broadsoft gapping down with volume. Had some big volume in it yesterday. Was Broadsoft out with numbers yesterday, or was it today? Give me a moment here. Let me try to pull this up on the screen here. Broadsoft, they did 12 net income, 12 million versus 32 a year ago. Total revenue is 165 versus 138. So they hit their top line. Oh, maybe I mentioned that before we went to that first break. So it looks like the numbers might have come out this morning. Somebody knew something, or maybe it was somebody knew something. You had volume yesterday coming out of this thing, 4.2 million shares. Now, moving into an area, this thing here, what a wacky stock this is. If you take a look at the breakdowns. It's had some breakdowns here, and I'm just simply coming back to the one that's easiest on my screen here with the data I've got up. Has a breakdown on May the 7th, moves down with 4.2 million shares. Really huge gap down, because the session before that in the evening closing out at 33.15. So wide price spread, accelerated volume, goes ahead and makes a low going into July 17th, 2012, out at $20.13. Then a big sign of strength, just like we had in fact, a bigger sign of strength coming up than a sign of weakness to the downside. Of course, if I go back off to the left-hand side of the chart even further, we'll probably find a little psychoanalysis there. But it has a nice sign of strength on August 7th, 7.2 million shares to the upside, but it gets down into the area where it broke down. It got beyond the eventually got beyond the gap, the low of the May 4th session, but still was not able to get up to the highs. Looks like all that it really did was it touched the swing point. The actual swing point on the daily chart was May 3rd, that low, 43.18. There was 1.4 million shares there. No, it didn't even make it up there. Made it up there with 936,000 shares on September 17th before it gave itself up, and then it gaps down with some volume. So you got another sign of weakness, 5.4 million shares on November the 6th, and now today you've got another big sign of weakness out here. So let's pull this back even further. Let's put this on a weekly chart and see where Broadsoft is headed to. Does not look good here. It's really taking on a swing point. The swing point on the weekly chart, which it's trading into right now, is July 20th, 2012. 3.6 million shares. It's coming in there hot, coming in with volume. We take a look at A to B equals CD downs on this equity. You come off of the high way back in March 18th. March 18th's high of 2011 was 55.45. That's my A point. My B point is going to be the week of August 26th, 2011, 25.07. And that C point right up here on May the 4th, 2012. 1-to-1 says 14.98. 1 to 1.272 takes you all the way back to it looks like the IPO area back in 2010, right around $8 or so. So Broadsoft not looking good here. Certainly going to take on the lows from July 20th out there. Again, that being $20.13. That was on Broadsoft. Let's go take a look at, let's see, you got Google up with up $5, Netflix up 4, Continental Resorts, CLR is the ticker symbol. Let's go take a look at that equity. That is up 3% here this morning, CLR. And then we'll go take a look at Universal Display Panel. If we take a look at it's not CR. No wonder that didn't look right. CLR, Steve-O. CLR. Must have those fat fingers working here this morning. They didn't hit the keyboard right. Gapping up this morning, taking out a swing point here. See if it's going to do it with volume. We're looking at the February 7th level. That was $86.57, 921,000 shares. So far in early trading, 12 minutes, it's done 249,000 shares. So it's got some volume behind this move here. Also taking out another swing point consolidation area. Let's see, that is the September 17th level, 720,000 shares. Let's pull this back, see if we've got an A to B equals CD up. Oh, this is traveling right into where it broke down. This thing broke down with some volume. And we'll put this on a weekly chart. May 3rd, 2012, did it with 3.7 million shares to the downside. It's trading right now just back up into that level. The actual swing point would be May 1st, the low 88.61. And the high of 91.82, 1.3 million shares there. So we'll see if that overhead supply is still in place today. Maybe this is just simply going to consolidate in between the $90 area and perhaps all the way down to the January 2nd levels around $74. But let's put this on a longer-term chart out here. Let's go take a look at the weekly chart, see if there's any other information out here. Weekly chart shows, not too bad, actually. The weekly chart here, you've got some volume as it pushed up into the highs going back into the early part of 2012. In fact, it was February 2012. That pushed up with 12 million shares and then made the high. So on the weekly chart, it is trying to get into that swing point from February 24th. I suspect that it will do that. Let's take a look at the weekly here. 3.9 million shares. See if it got over that with more volume. 4.2. Most certainly did. So on the weekly, setting up a small A to B equals CD. This is the ticker symbol CLR, which is Continental Resorts out there. I believe it's Continental Resorts. Let's see here, Continental Resources. My apologies. The 1-to-1 is 89.23. I suspect it'll make a run to that 95.52 into the swing point from February 24th out there. Let's go take a look at Universal Display. PANL is the ticker symbol. Let's go see what that is trading up into. This thing gapping up just slightly this morning. Looks like a small little gap out there. It's got volume-wise. This thing here, though, is running into some big resistance. We can see where the area of resistance is on this. We'll just draw a black line across the screen here, and that area will go figure out that price point right around, put that in black, as I said, right around the level of about $34.50 is what we'll call it. This thing here really moving down, gapping down with substantial volume. The week of November the 8th out there, 7.7 million shares. This is a daily chart, my apologies. On the daily chart, gapping down with volume, 7.7 million shares to the downside. You had some additional, this thing tried to move up, but it only moved up with 3.2 million shares. That's where that the $34 and change, between 34 and 35 is acting as a resistance area for this equity because of that big downdraft that was out there. We also had a little bit of a downdraft. 4 trading sessions go on. February the 25th out there, moving down with 3.7 million shares. So far today, in the first 15 minutes of trading, 396,000 shares. That is on panel, PANL, Universal Display out there. Let's go take a look at Chicago Bridge. CBI is the ticker symbol. Let's go see what Chicago Bridge is doing. This is an equity that's been around forever. CBI gapping up this morning, but giving back some of those gains here. Let's go take a look at Chicago Bridge, see how this is doing. How about that? This thing is also trying to make its way back into the 2008 time frame out here. Let's go take a look at this on a longer-term chart. Let's look at it on the weekly. Completing a 1-to-1 A to B equals CD pattern. How about that? That A to B equals CD pattern started out back in 2010, the June 11, 2010 time frame. Little hammer candle out here. That hammer candle low, 1664. That was your A point, your B point in Chicago Bridge. Came in July 22nd, 2011, up at the high of 45.12. Pulls back to the 0.618 level. Really does that level, that number was 2752. Actually pulls back to a price point of 2676. So not too far away. That makes your B point, and then off to the races here, making a 1-to-1 A to B equals CD. That's what it is completing up right now. Let's take a look at the volume as it took out a swing point here. Let's take a look at the B point first. We'll draw the line across the bottom of the screen out here. That B point was originally not taken out with volume, and then boom, right here it was. The week of, so you can see it gets over the swing point, and this is a weekly chart we're looking at during the time period of February of 2012 all the way to the almost the end of March. Gets up above that level, but you can see it does it on lighter volume. Comes back, and this thing here had some volume the week of August the 12th, so it came back and tested that level out and said, nope, not going to let the bears take control. The bulls still in charge on this equity. And then finally it does cross the next swing point as well as the B point. It does it with volume the week of December 21st, 2012. Not too bad considering that was the week before Christmas out there. So it crosses that. You've got to confirm 1 to 1 A to B equals C to E up. No bears on this equity in the weekly chart. It says to me 62.90, likely the target range for Chicago Bridge out there. Let's go peek in on some of the other markets out here. Let's go take a look and see what we see here in the currency markets, although really flat out there. But let's start off by taking a look at the King. Let's look at the U.S. dollar index out here. U.S. dollar index, this morning coming back and really testing the resistance here. That's that black horizontal line going across my screen. What I'm using is really the top of that is 81.51. Doesn't look like it got down to that exact number. This morning it gets down to 81.54, so close enough. And you can move that black line up or down just a tad in here. It's really acted as an area of resistance. And as you know, when you break an area of resistance, the market will typically come back and test it, see if it is support. And so far, right now, we're seeing King Dollar say, yeah, it is. Now, if you take a look at the bottom of the screen, you can see the U.S. dollar index most certainly moving into a overbought condition out there, and therefore needs to really work that condition off before continuing its zoom to the upside here. So a few trading sessions of moving sideways to work that condition off is a good cure for that. 82.14 was the 1 to 1.618 retracement off of the highs to the lows. Actually got up to 82.04. Next level up on the U.S. dollar index is going to be $83.06. Looks like the U.S. dollar index is off to the races. We get back from this break, we'll go check in on some of the currencies. We'll take a look at the euro, Japanese yen. We talked about that yesterday. We talked about the divergence between the U.S. markets and the euro, Japanese yen, which is not confirming the move up. 877-927-6640. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 17 points right now. Composites up 10. S&P's up 3. Small caps, Russell 2000 up almost 2 points out there. Before we went to break, we were taking a look at the Euro-Japanese yen cross pair, the currency pair out here. And if you take a look at it, this thing is really setting up for a continuation pattern to the downside. Big down thrusting day here, the day of December. I don't know why I keep saying I get my months here mixed up. But February 25th, just simply 4 short trading sessions ago, February 25th, big downdraft day. What we can see here, the body of the candles here over the last 3 trading sessions, small-bodied candles traveling with inside the large body here, that large downdraft body, not overbought nor oversold. This has room to move to the downside. A close below 119.91 on this will set off the next move down, the A to B equals CD pattern. This has further to go. If we just simply take a look at just a simple retracement here, that would be coming off of the lows here from March. Holy cow. How about November 13th? We know our markets made a low on November 16th. In the case of the Euro-Japanese yen, now remember, if you listened yesterday, what I shared with you is the Euro-Japanese yen currency pair is the currency pair that best emulates the S&P 500, and is why it is that you should always be paying attention to it. Now, the Euro-Japanese yen, I just said that the bottom in this case came in on November 13th, moved up. You can see moved up. You had a nice bullish candle. Quite frankly, on the 14th, you had another nice candle on the 15th, and on the 16th, just a little bit of a pause to the upside as it was clearing its little 100% move of a move here. So the Euro-Japanese yen giving a signal before our markets made their bottom on November 16th. Something to think about. Now, what do we take a look at here? The Euro-Japanese yen, I showed you on the weekly chart how it's definitely put in a significant high out there. If you weren't watching yesterday here, I'll just flip this to the weekly chart for you. You can see it's a yellow box here. That yellow box is marked with 13. That is really referring to a numbering system I have on my chart that is a system developed by Tom DeMarcus, TD combo out there. Really significant to be paying attention to those, as well as other patterns you can see on the weekly chart here. Each time it's made one of those 13 counts, it has been of significance. Now you've got the pullback going on the weekly chart. You are down below the body of that candle from February the 1st out there. Now if we go back to the daily chart here, you can see, so this setup here suggests that if it does close below the February 25th close out there, would create a falling 3 pattern. That's a continuation pattern to the downside. It would, and it would really need to technically do that within the next 2 trading sessions out here. Now I go back to my correlation chart between the Euro-Japanese yen currency pair, which will show up here in the bottom, and the S&P at the top. The S&P up over the candle of February 25th. And, of course, the Euro-Japanese yen nowhere near that. Yeah, making a slight movement to the upside, but nothing like we see here in the S&P 500. So you've got divergence that's going on in a currency pair that's really a great leading indicator. Just like we saw it in November at the lows at November 13th, 14th, and 15th, it's a great leading indicator at the top as well, because this started pulling back before our market started pulling back, also giving several signals out here. Folks, stay tuned. The Money Masters show is up next, and it is Terrific Thursday. That means our lineup includes Basil Chapman. After that, Larry Pesavento doing the Futures Hour. Daryl Martin after Larry from 1 to 2. David White, birthday boy David White. Give him a call, folks, and wish him a happy birthday. You get to do it today, and you get to do it tomorrow. He's from 2 to 3. Ken Shreve, 3 to 4. The Tom O'Brien Show from 4 to 6. It's been great to be with you, folks. Remember, always remember this. You have an amazing power within yourself, and that power, it's so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Thursday, folks. Look forward to seeing you soon. Take care now.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.